The house you are sitting in right now is very likely the biggest thing you own. You worked for years to pay it off. You raised a family in it, or grew old in it, and somewhere along the way you decided it was finally safe. It is yours. Nobody can take it now. But that is not quite true. And it is the reason I am making this video. Every single year, older people lose the very home they already own. Not because they wanted to sell it, not because they did anything wrong. They lose it slowly, to a property tax bill that keeps climbing, to an insurance bill that doubles, to a loan that sounded like a good idea at the time, and in some cases, to a thief who never once sets foot on the porch. And here is the cruelest part of it. For nearly every one of these, there was help sitting right there that could have stopped it, and no one ever told them it was there. There are 5 of them. 5 ways the home you own can be taken out from under you. I want you to know every one of them by name, because the danger you can name is the danger you can stop. So let us take them one at a time. The first one is the bill that has quietly forced more older people out of their paid-off homes than almost anything else, and that is your property tax. Here is the cruel thing about it. You can own your home free and clear, owe not 1 penny to a bank, and still lose it, because the property tax never stops coming. And it climbs every year as your home is valued higher, even while your income stays flat. For someone living on a fixed check, a tax bill that grows from $2,000 to $5,000 over the years can become the thing that finally breaks them. But most people have never heard of the one program that can stop it completely. It is called a property tax deferral. In most states, once you reach a certain age, usually 65, you can ask the state to simply pause your property tax. You pay nothing now. The state covers the bill for you and waits. You keep living in your home year after year without paying that tax out of your own pocket at all. The bill does not vanish. It waits quietly until the day you sell the home or pass it on, and then it is settled out of the value of the house, usually with only a small amount of interest added. Think about what that really means. Instead of lying awake every autumn, afraid that this is the year the tax bill finally forces you out the door, you pay nothing. You stay in your own home, and the bill simply waits in the background until the house is one day sold or passed down. For a great many older people, that single program is the one thing standing between them and losing everything they spent a lifetime building. For an older person being squeezed out of a home they already own, this can be the difference between staying and leaving. The call that starts it is to your county tax office, and the question is simple. Do you have a property tax deferral for seniors, and how do I apply? The second one is a bill that has been climbing faster than almost any other in the last few years, and that is your homeowner's insurance. If you still have a mortgage, you are required to carry it. And even if your home is fully paid off, losing it to a fire or a storm without insurance would cost you everything. So you pay it and you watch it rise, sometimes doubling in just a few years, until it begins to eat into the money you need for food and for medicine. Most people simply accept it and assume there is nothing to be done. That is not true. There are several ways to bring that bill down that the insurance company will never once volunteer. A great many insurers offer a discount for older homeowners, or for people who have stayed with them a long time, or who have not filed a claim in years. And you usually have to ask for it by name. If your bill has jumped, you have every right to shop it with other companies, because the price for the very same house can differ far more than people realize. And if your area has become hard to insure at all, many states run what is called a FAIR plan, a state-backed option that can cover you when the regular companies will not. So the call to make is to your own insurance company first, to ask what discounts you qualify for, and to have them price your policy again. and then to one or two others to compare. An afternoon on the phone can quietly save an older homeowner hundreds of dollars a year. The third one is not a bill at all. It is a deal that is sold to older people as a way to stay in their home, and for some, it quietly becomes the very thing that costs them the home instead. It is called a reverse mortgage. The pitch sounds wonderful. You are told you can turn the value built up in your home into cash, live there for the rest of your life, and never make a monthly payment. And for the right person, in the right situation, it can be a fair tool. But here is what the friendly advertisement does not make plain. A reverse mortgage is still a loan against your home, and it comes with rules that can trip up an older person who was never properly warned. You are still required to keep paying your property taxes and your insurance, and to keep the home in good repair. And if you fall behind on any of those, even by accident, the lender can begin to take the home. The debt also grows larger over time instead of smaller, which can leave little or nothing for the family you hope to pass it on to. So, before you ever sign one, sit down with a housing counselor approved by the government, whose help is completely free and who works for you and not for the lender. They will walk you through whether it is truly right for you and what safer choices you may have before you ever put the roof over your head on the line. The fourth one is for the moment many older people fear the most and almost never speak about, and that is the moment you fall behind. Maybe a health crisis drained your savings. Maybe a husband or a wife passed away, and with them went half the income, but not half the bills. Whatever the reason, you find yourself behind on the mortgage or behind on that property tax, and the letters begin to arrive, and the worry keeps you awake at night. Here is what you must know. Falling behind does not mean you have already lost, and reaching out early changes everything. The first place to turn is a housing counselor approved by the government, and their help is completely free. They will get on the phone with your lender for you, work out a plan, and know about help you would never find on your own. They can often get a lender to pause your payments for a while, stretch them out over more time, or move what you owe onto the end of the loan, so you can catch your breath and stay right where you are. Lenders will often agree to these things when a counselor asks, even when they would never offer the same to a frightened homeowner calling in a loan. One of those is called the Homeowner Assistance Fund, money set aside to help homeowners who fell behind catch up on their mortgage, their property tax, even their insurance. In some states, that fund is still open, though it is closing soon. So if this is you, the time to call is now, today, and not next month. The one thing you must never do is stay silent out of shame and wait, because the help begins to disappear once things go too far. Reach out early, and you have every chance to keep your home. And the fifth one is the strangest and the most frightening of them all, because it is a thief who steals your home without ever coming near it. It is called home title theft. Here is how it works. A criminal forges your signature on a document, files it with the county, and on paper makes it look as though your home now belongs to them. They can then try to borrow money against your house or even sell it, all without you knowing a single thing, until the collection notices or the strangers at your door begin to appear. And older people are the favorite target. Federal investigators found that while seniors were only a small share of the people who reported this crime, they lost nearly half of all the money that was stolen. They are chosen on purpose. An older person who owns a home free and clear, and who may not think to check the county records or their credit very often, is exactly the kind of quiet, trusting target these criminals go looking for. Now, here is the good news, and it will cost you nothing. You do not need to buy one of those services you see advertised on television that charge you every month, because those do not actually stop the theft. They only tell you after it has already happened. Your own county offers the very same warning for free. Most county recorder offices now let you sign up for a property alert so that the moment anyone files any document against your home, you get a notice right away and can stop it before any real harm is done. It takes about 15 minutes to set up. Call your county recorder or look them up online and ask to sign up for property fraud alerts. It is free, and it is the single best lock you can put on the home you worked your whole life for. This is general information to help you know what to ask for, and it is not legal or financial advice because the exact rules are a little different in every state. That is all 5. And look at what they share. Every one of them is quiet. Every one of them is counting on you not knowing it is there. And every single one of them can be stopped if you move before it happens instead of after. You do not have to handle all 5 today. Just pick the one that worried you the most while you were sitting here, the one that made you think, that could be me, and take care of that one this week. Make the one call, ask the one question. That is enough to begin. This is the home you worked your whole life for. These walls held your family. Your whole life is in the memories here. Of everything you own, this home may be the one thing that is still truly yours. And keeping it that way, for as long as you want to live in it, is worth an afternoon of your time. You earned this home. Now go and keep it.